Well, stocks are just getting crushed out there. Oh my goodness, it is wild. I mean, basically, the Fed sucks, the market's being manipulated, and unless you own all old man stocks, your stocks suck too, and so do mine. We are all just drowning in a sea of red and wanting to throw in the towel and swear off stocks forever. But please don't do that just yet. I want you to view this current down market as a party with me because this is where fortunes are made, and I will show you how to do exactly that. But we also need to talk about what is actually worse than a stock market crash, because if you do these, it will crash your portfolio even worse than a stock market crash will. Now, how do I know these are worse? Well, honestly, because I've done them all and lost a lot of money. So I apologize in advance for this video being way longer than usual, but you guys deserve to get this information because it is critical right now. And just for context on how important it is, I had an emergency live stream last night with the group to discuss this and calm the nerves of the group, as it was a bit of a jolt to the system for some, and I know the noise will be amped up to 11 for the next few weeks, so we needed that hour and 15 minutes or so to just kind of interact, answer everyone's questions, and have some great discussion and be ready, which paid off this morning for many people. And we actually do a live Q&A weekly or anytime the market goes nuts, so if you want to join, it's a great time to do it, as the New Year's sale does end this weekend. And you guys know the deal. You get 4 free courses, my watch list with price targets, my buy and sell alerts, live weekly Q&As, and special ones like we did last night, and a ton more, so just check out the pinned comment. And before blasting me for promoting it, I have no ads, no sponsors. This is what YouTube pays me in a month, and I give half of that and half the group's proceeds to charity. So how do you get to the point where days like yesterday and this morning are exciting instead of deflating and just a kick in the junk? I mean, how the heck do you get there? And that's not being fun, being kicked in the junk, I know. Well, let's discuss how to look over the sea of red and see the treasures that await you. First, understand the market always comes back. We have had exactly 2 bear markets in 20 years, and both lasted well under a year, and one was like 2 months. But look at the bear markets. They last for years. So basically the pain is always temporary in the long run, and the runs after the pain are always epic. Most of the time, the more pain means bigger and more prolonged run-ups. Run-ups. I think I said that right. Run-ups. Buying during those bear markets is where my biggest gains were made overall, and that is where fortunes are made, not during the inevitable run-ups that happen afterwards. Second, zoom out and view the market from that perspective and not the day-to-day, week-to-week, hour-to-hour, month-to-month movements. If you bought Tesla in 2017 or 2018, it looked like a terrible buy if you just look at that year, and you honestly look kind of stupid for buying. Zoom out, and you look like a complete genius. The people who buy great stocks during those down or stagnant times always look pretty good in the end. And you always hear people say, I wish I would have bought back then. Well, guess what? When you're in the middle of the sea of red, it's hard to buy like many of you are experiencing right now. So zoom out and keep the big picture in mind and know this is where the potential genius buys lie. Now, if you bought like crazy like I did at the end of last year and continuing yesterday and today, can it go lower? Absolutely it can, and it probably will if I buy, because that's kind of the running joke in the Discord, but you know what? I really don't care. The point is, nobody can time the bottom, but as long as you're not buying hype rallies or buying speculative or trash stocks, it honestly doesn't matter. And third, the lower stocks go, the less risky they are. This is why Warren Buffett says be greedy when others are fearful and fearful when others are greedy. He knows the cheaper stocks go, the less risk they come with. And let me give you a quick example just to illustrate. If Tesla falls tomorrow or next week or whenever to $400, is Tesla all of a sudden more risky at this new lower price? Well, let's kind of break it down real fast. Are revenues going to be great this quarter? Yep, I think they will. Will every car they produce sell next year? Yeah, I think so. I mean, right now, if you buy, you are waiting a few months minimum and out more than a year or more depending upon the model you choose. Will Tesla's margins magically collapse because the stock price went down? I don't really think that's how that works, and I don't see that happening. So production is increasing, demand is more than they can produce, revenues will continue to increase because of that demand, and capacity to produce more increases. There is no reason margins should go down, which means profits go up because of the increased revenue. So in this example, the business got better, the financials got stronger, and the stock price went down. That is the very definition of taking risk out of a buy for a long-term investor. Tesla actually became far less risky to buy. But I'm going to put this meme up here, and it is so true, and it illustrates human nature and what happens perfectly. When everyone wanted to invest this time last year, stocks were never more risky. but the line to invest was completely out the door. And when those same stocks everyone wanted last year are now way less risky and cheap, nobody wants anything to do with them. Understanding that buying great stocks when nobody wants them and they are cheap is when you are actually taking on the least amount of risk, even though everyone, the news, your friends, YouTube, everyone, your family, everyone will say the complete opposite. You have to understand when it is more risky and when it is less risky. And if you can master that, you're going to have a great return on your investments. But wait, whoa, slow down. Don't get too excited and just run out there and buy the dip now and everything. There are some critical mistakes you must avoid, or you will be the one who never gets to see the bull market on the other side of all this. The first would be to not try to time the market. Nobody can do it with any degree of accuracy, especially in this type of market. But I could not tell you how many people tell me they're not trying to time the market, but they're just going to sell and wait until the stock drops more and then buy it back. But, they're not trying to time the market. Really? That's not what you're trying to do? If it was that easy, everyone would be doing it. But timing the market is actually impossible. Buying a great stock at an undervalued price always pays off over the long term, even if you don't even come close to hitting that 52-week low on your buy. And more importantly, trying to time the market also leads you to committing the second mistake, which would be investing with emotions. Now raise your hand if you've ever owned a stock and it started to tank and you felt the need to panic sell, or even worse, you get the bright idea to sell and then try to time the bottom. And those of you that didn't raise your hand are lying, by the way, just so you know. Panic selling and trying to time the market are two of the biggest killers to your portfolio. I've watched people in our group get all excited because a stock they have been wanting to buy fell huge on this dip in December, and they were buying according to their plan. Then just a few days later or weeks later, they were running to the FOMO panic room because they wanted to dump the shares because it was just going to zero because the dip just kept dipping and there was no end in sight. What fundamentally changed with the company to make it a bad buy now or not a great stock 5 years from now? The answer is nothing changed. That is what happens when emotions seep into your investing. So try to eliminate those emotions and stick with your plan. And the last mistake we will discuss that will destroy your portfolio even in a bull market would be listening to all the noise that is out there. Another honest question here, guys. How many of you out there last year in a raging bull market bought NIO at $60 or Lucid at $80 or Palantir at $40 or Bingo at $15 or any of the penny stocks that were going to the moon or any of the other stuff like that at the beginning of last year? I put out videos in the madness that was January and February of that year saying that I want no part of Lucid at $80, and oh my goodness, the hate I got for saying Bingo made no sense at $8, much less at $15 based on the valuation was just ridiculous. But you know what? It was okay. We took the hate and we were busy buying stocks like Apple in the 110 to 120 range during that time because they were actually undervalued, if you can believe that. But guess what? In 2022, it's like opposite day and everything's working in reverse. Now there are videos and articles telling you to buy safe stocks that are twice their normal valuation or more, or just ridiculously overvalued. And then simultaneously, they're telling you to avoid many of the great stocks that are now undervalued, and in some cases really undervalued based on the valuation. It's basically just the opposite message that they were giving you last year. The best way to avoid this is to ignore the noise, don't watch, and do your due diligence on every stock you want to own so you can not only identify when a stock is undervalued or overvalued, and by that I mean not based on someone's opinion, but based on the actual valuation that you come up with. That's how you ultimately avoid this mistake. So do not leave your investing future in someone else's hands. You need to take control, and these points are a great place to start or implement. And guess what? It's not that hard. If a dummy like me can do it, all of you guys out there can do it too. So I apologize again for the length of this video, guys. I'm really sorry, but there was just a lot of information to get out there. And so let me know if this type of video helps you guys and you found a lot of value in this style of video. I mean, let me know down in the comments and let me know what you think. So thanks for watching, and we'll see you in the next one.